Hello there, I'm Edward Harrison and this is Boom Bust, and these are the stories that we are tracking for you today. Austria went to the polls to choose a new president yesterday, and the outcome still wasn't clear after votes cast yesterday had been counted. Mail-in votes decided it. We'll tell you who won and what this election means for Europe. Then we've got Jim Rickards on the show. With the Fed acting like it wants to raise rates again, the best-selling author of The New Case for Gold tells us if the Fed's for real or if this is a head fake. Then in today's big deal, move over El Nino and make way for La Nina. RT correspondent Marina Portnaya will tell us if this new big weather pattern will cause mayhem and which countries will be affected by it. You won't want to miss a moment, and it all starts right now. Our top story, Austria. In a cliffhanger, Alexander von der Bellen won Austria's presidential election, preventing Norbert Hofer from becoming the EU's first far-right head of state. Hofer led narrowly after votes cast during Sunday's election were counted, but mail-in votes gave von der Bellen victory by 50.3 to 49.7%. Now, Green Party candidate von der Bellen won the support of educated female and urban voters, particularly in Vienna, where 61% voted for him. The 72-year-old has promised to heal the rifts in Austria brought to the surface during the election. Under the leadership of Heinz Christian Strache, Mr. Hofer's FPÖ, or Freedom Party, has garnered much support in Austria due to worries about globalization, the banking and economic crisis in the EU, and the recent wave of immigrants to Europe. Recent Chancellor Werner Faymann took a sharp turn to the right, trying to blunt some of the FPÖ's appeal, but Mr. Faymann's attempts failed, and he was forced to resign. Christian Kahn became the chancellor on May the 17th as a result. Reactions across Europe as the election neared were stark. In Italy, European Minister Sandro Gotti was quoted saying, "If you think you can counter populism with populist responses that are slightly more moderate, then you are heading for failure." In France, former French President Nicolas Sarkozy felt both candidates represented extremes, saying Austria is paying the price for the failure of the big coalitions that the elite love so much. When there is neither a left nor a right, when there is no debate, it leaves an enormous space for the extremes to fill. The next Austrian legislative elections will be held in or before 2018. In recent polls, Hofer's Freedom Party was polling at 33%, 10% ahead of the next party. That means that while Hofer may have failed to become president, his party boss, Heinz Christian Strache, may well become Austria's next chancellor. Now, Turkey may be refusing to send highly skilled refugees to the EU in the recently penned Refugee for Aid deal between the two. According to information from several countries, including Germany, the Netherlands, and Luxembourg, Ankara is instead sending a disproportionate number of illiterate refugees and refugees who are in need of medical attention. Now, German Chancellor Angela Merkel, who spearheaded the one-in, one-out agreement, flew to Ankara Monday for an emergency meeting with Turkish President Erdogan. Ankara has already threatened to end the deal with the EU due to a dispute over visa-free travel for Turkish citizens. Under the hastily arranged plan, Syrian refugees on Greek islands are being returned to Turkey. For every refugee returned, EU countries are taking one asylum seeker currently in Turkey. Now, Turkey has requested 6 billion euros in aid, as well as visa-free travel for Turkish citizens to Europe as conditions for the deal. The visa-free travel remains a key sticking point for Turkey, as EU negotiators believe Turkey has not met criteria on corruption, data protection, law enforcement cooperation, judicial cooperation, or legislation on terrorism to qualify for visa-free travel to the EU. Now, regarding refugees, the UNHCR, the UN's refugee agency, usually decides who is eligible for resettlement. But under the current deal, Turkey is allowed to pre-select who gets to go to the EU, and Turkey reportedly told the UNHCR that Syrian doctors, engineers, and academics would be excluded from resettlement. UN officials and human rights groups have criticized the deal on the grounds that the mass deportation of migrants from Europe violates international norms. Moreover, there are concerns that Turkey may not be a safe harbor country for all refugees sent back, and that some Syrian refugees would be at risk of being sent back to the war zone from which they had escaped. Following a number of disputes with China, Vietnam has amped up its defense spending by the billions, and it looks like we could see this trend continue for the time being. Boom Bust Bianca Ficini has more on that.
Despite Vietnam's history with the United States, diplomatic relations seem to be as friendly as ever. On Monday, President Obama announced an end to the U.S. embargo on arms sales to the Southeast Asian country, and it has many people speculating if this has a role in the territorial battle over the South China Sea. Now, it is hard to determine exactly how much the Vietnamese government spends in defense, since they don't publicize the budget. But according to one research institute, they spent $1 billion in 2005. A major difference from the $4.4 billion spent in 2015. Most analysts estimate that the budget will grow this year and possibly reach $6.2 billion by 2020. But that barely compares to China, where the government spent $215 billion last year. Meanwhile, Obama claims the embargo reversal has nothing to do with that, and said the decision to lift the ban was not based on China or any other consideration. It was based on our desire to complete what has been a lengthy process of moving towards normalization with Vietnam. The president added that sales would be based on Vietnam's commitment to human rights and is scheduled to meet with activists on Tuesday. But that hasn't appeased rights groups like the Human Rights Watch. Phil Robertson, director of their Asia division, said, in one fell swoop, President Obama has jettisoned what remained of U.S. leverage to improve human rights in Vietnam and basically got nothing for it. But even if the U.S. didn't repeal the arms ban, Vietnam would have plenty of other resources, including several European nations and Israel.
Yeah, that last point is very true. Let me ask you, given everything that we've been hearing, what does China think about what's going on there? Well,
after the joint press conference today, their foreign ministry made a very quick and brief but diplomatic announcement, and the spokeswoman said the arms sales ban was a product of the Cold War and should no longer exist. We hope the lifting of all such bans will benefit regional peace and development, and we are happy to see the United States and Vietnam develop normal cooperative relations.
Interesting.
Yes, yeah. I don't think we could expect anything more or less than that for now.
Right. Thank you. Thank you for that report, Bianca. Now, German chemical giant Bayer has made an unsolicited takeover offer to purchase U.S.-based agrochemical and agricultural biotechnology company Monsanto for $62 billion, fusing the world's two largest suppliers of crop seeds and pesticides. This comes after China National Chemical Corporation took over Syngenta and the DuPont Dow Chemical merger. Now, joining me now to talk about this is RT correspondent Ashley Banks. We're going to talk about this a little bit further. Ashley, you know, my question to you on all of this is, if Monsanto actually went with this deal, which was an unsolicited deal, what would it allow the company to do?
Well, as we see, first of all, that Bayer is offering to buy out Monsanto at $62 billion, which is huge. But through this deal, it will allow Bayer to tap growing demand at a time when farmers must boost productivity to feed an estimated 10 billion people worldwide by the year 2050. Now, Bayer CEO Bowman is hoping that rationale will win over skeptical investors and overcome a public backlash against Monsanto's genetically modified seeds. Now, Ed, I want to say 2 decades ago, Monsanto started selling these seeds that now account for the majority of corn and soybeans that grow here in the U.S. Bowman is hoping to pull off the biggest corporate takeover ever by a German company. This move would eclipse a planned combination of Dow Chemical and DuPont's agricultural units. However, this deal has gotten a lot of backlash by many people, including a major Bayer shareholder who is calling this deal the perfect example of arrogant empire building.
Interesting. You know, I can imagine there are a lot of concerns from different parties, especially when you were talking about the fact that the pesticides and so forth. And I know that, you know, TTIP, there were some concerns about that. What's the concern from the shareholders' perspective here? Yeah,
Ed, many people believe that Bayer is stretching its finances to become the world's biggest seller of seeds and farm chemicals. Of course, this, as you mentioned earlier, this comes on the heels of China National Chemical Corporation's win over Syngenta a couple months ago by valuing the Swiss company at more than 6 times its earnings before interest, taxes, and depreciation. And on May 10th of this year, Bayer sent a written proposal to Monsanto offering $122 per share, which is a 37% premium to Monsanto's stock price. And I want to mention, after this deal was revealed, Bayer's stock dropped as much as 4.1%, which is huge, and Monsanto's shares posted muted gains, rising 6% to $107.67 in New York trading. I want to read you a quote by a fund manager at Royal London Asset Management Company. Her name is Andrea Williams. She said this: "I don't think they will get it at $122 because I don't think Monsanto will accept that price. The danger is that you start then having discussions about how you're going to fund the higher offer because they're already stretching the balance sheet." So at this point, Ed, as you can imagine, investors remain skeptical about this deal.
That is interesting. I mean, 37% premium is ridiculously high, and then they think that they're going to get more. You know, how has Monsanto responded so far? Yeah, so far Monsanto has been quiet publicly. The company is only saying that they are just reviewing the terms. Of course, they're consulting legal and financial advisors. But many people, including experts and investors, are just saying this looks like it's going to be impossible, because in order for Bayer to go through with this deal, they'd have to balance this out with debt and equity. Right, yeah. Well, keep us updated on that, especially given the Dow-DuPont thing. I mean, there's going to be some antitrust coming out of this, I would imagine. Indeed. That was RT correspondent Ashley Banks. Now, it's time for a quick break. Stick around, because when we return, we've got Jim Rickards back on the show. 3 Fed presidents are telling us that the Fed is going to hike rates even as manufacturing data released today was at the worst since 2009. Should we believe them? Jim will tell us. Then in today's big deal, La Nina is coming. And while it might help U.S. natural gas output, it's going to hurt Australian coal and worsen a drought in Brazil. And as we go to break, here are the numbers at the closing bell.
What'd you have for breakfast yesterday? Why would you pick those shoes? How fast is your Wi-Fi? What's your dog's name? Why'd you name him that? What's your biggest fear in life? Ever been on a hayride? When's the last time you read a book? What would you say if you ever met the Pope? Who's the best quarterback of all time? What's one topping that doesn't belong on a pizza? Now, I've interviewed you too. Question more.
You're watching an RT America special report.
Man, it ain't about him. It's about you. It's about me. It's about everybody.
Basically, everything that you think you know about civil society had broken down.
There's always going to be somebody else one step ahead of the game.
We should not be in the business of normalizing violence.
We don't need people that think like this on our planet. This is an incredibly tense situation. For decades, the American middle class has been railroaded by Washington politics. Big money corporate interest has drowned out a lot of voices. That's how it is in the news culture in this country now. That's where I come in. I'm Ed Schultz. I do the news on RT America. I'll make sure you don't get railroaded, and you'll get the straight talk and the straight news. Question more.
Welcome back to the show. Earlier on Monday, 3 regional Fed presidents came out with statements in support of Fed interest rate increases. And while the comments were not exactly unexpected, they were at odds with manufacturing data released this afternoon showing the manufacturing sector in the U.S. contracting last month for the first time since September 2009. Now, to discuss the Fed and the U.S. economy, we have best-selling author and financial commentator Jim Rickards on the show. I told Jim that San Francisco Fed President John Williams is even saying that he can see as many as 7 more hikes through 2017. So I asked Jim if the hawkish comments of Fed governors was credible to him. Take a look at how he responded.
Well, the thing is, they're not governors, Ed. They're regional reserve bank presidents, and that's an important distinction because they are on the FOMC, so they do get to vote on the rate decision, so they have a powerful role. But there is a distinction between being on the board of governors on the one hand and being a regional reserve bank president on the other. And the distinction is the governors don't hold the reserve bank presidents in that high a regard. When they go in and do the FOMC meetings, first of all the regional reserve bank presidents are there. I understand that some are voting, some are non-voting, and they rotate that. But the fact is they're all there and they all get to say something. And it kind of dilutes their voice. And the decisions are actually made by an inner core. You know, the funny thing about the governors, there's 7 governors, but there are 2 vacancies. So there are really only 5 sitting governors right now. And it's really Yellen, Fisher, I would say Dudley, who is the regional reserve bank president. He's an exception to what I just said. He's a powerful voice. They're the gang of 3. And I would add Lael Brainerd to that. I really think Lael's the thought leader at the Fed right now. So what you have, so I analyze it differently. I think it's an important decision, but I don't put a lot of weight on what these regional reserve bank presidents are saying. They have their own views. They don't carry that much weight, or they're being asked to kind of go out and condition the market a little bit, test the waters, and see what happens. But this is all an expectation game. It's all a form of manipulation. We'll see what actually happens in June, but I don't put a lot of weight on it. But of course, the market does, and then we have to watch the market.
And that was a good catch, by the way, because I did mean president instead of governor. But, you know, Jim, here's what we know about the U.S. economy. It was growing at a sub 1% level in Q1. The Atlanta Fed's GDP now numbers running about 2.5% for Q2. And all in all, the U.S. economy looks to have been growing at about a 2% rate over the last year. Meanwhile, the U.S. unemployment rate is running at about 5%. So Williams is calling this full employment. How do the numbers stack up for you, and what are you expecting for the U.S. going forward?
Well, it's nowhere near full employment because obviously a lot of the jobs are part-time. Some of the people are working 2 jobs, so they get counted twice. Labor force participation went down in the last jobs report. So there's plenty of slack in the economy. 5% might have been tight, 20 years ago or 30 years ago, based on a very different economy and different demographics and different structural composition of the economy. But today, it's not as meaningful. I think the Phillips curve is nonsense. I mean, the Phillips curve is theoretic, but when you actually look at it in the real world, they keep moving the goalposts. Remember December 2012, the Fed said, we promise not to raise rates until unemployment hits 6.5%. Well, it's all the way down to 5, and there's only one rate increase. They did the liftoff in December, but before December, it had gone down below 5, and they hadn't raised rates. So they keep moving the goalposts on that. So there's plenty of slack in the economy. The Fed's not even looking at the labor market right now. They're just looking at inflation. Yellen said that. Go look at her speech to the New York Economic Club on March 29th, and she basically adopted the position that Charlie Evans had through all of 2015, which is, there's this asymmetry in inflation. If what Evans says, we don't know what's going to happen. We don't know what we're doing. But if we tighten early and we cause deflation, we can't fix it. But if we pause and we cause inflation, we can fix it. So even though they don't know what they're doing, the risks are asymmetric. It's better to do nothing than to make a mistake that you can't fix. That's the position Yellen adopted. So it's all about inflation. I don't think I wouldn't put a lot of weight on the jobs report.
Fair enough. Let's say, though, that the Fed does go ahead and hike rates, Jim. Stocks in the U.S., they've been treading water over the past years. Revenue and earnings have stalled. And now you are increasing the discount rate applied to those shares. How do you expect the equity markets to react to another rate hike from the Fed anytime this year, whether it be June or later?
Well, probably equity markets probably go down 10%, which they did, or close to it, twice before. Once August 2015, the second time January 2016. Both times the markets fell off a cliff, and in January you had a more than 10% technical correction. And the reason for this, Ed, is that throughout most of quantitative easing, QE1, QE2, QE3, the Fed was trying to operate through what they call the portfolio channel, which is, I'll make fixed income so unattractive for you with such low rates that you'll go out and buy stocks and buy real estate, pump up the asset values, create a wealth effect, and people will lend and spend. Now, that whole theory is nonsense, but that's the theory the Fed was operating under. The problem is they've created two bubbles. They've got a real estate bubble. They've got a stock bubble. Those channels aren't working anymore. The stock market really peaked out in kind of May 2015. I mean, that's not the technical high, but really it's just gone sideways with a certain amount of volatility and for almost 2 years, for over a year at this point. So, so the only channel left are the currency wars, are the exchange rates. Now, under the Shanghai Accord reached February 26 in Shanghai, China, the decision was keep the yuan pegged to the dollar. Because remember, when they broke the yuan peg in August, that's what triggered the stock market sell-off. So keep the peg in place, cheapen the dollar, the yuan could go down with it, and then the yen and the euro would have to get stronger. And, you know, too bad for them because they had 3 years of yen weakness and Japan sort of blew their chance. So that was the playbook. The problem is if the U.S. raises rates, you're going to strengthen the dollar, and the Chinese will unilaterally devalue. They've been playing ball with the U.S. for the last 3 months, but they'll devalue on their own because they need the help. They're desperate. Their economy is slowing dangerously. So the Fed's really playing with fire here. If you raise rates, that's going to strengthen the dollar. The Chinese will break the peg, and either way, U.S. stock markets will fall out of bed. By the way, the person who's talking about this is Lael Brainerd. I think she has Yellen's ear, so my guess is they won't raise rates. But if they do, look out below.
That's interesting. You were talking about the international channel, but, you know, there's also the bond markets. I mean, when you look at high yield as an example, things there, they've calmed down since the January hike or the January jitters that you talked about. But S&P says it expects energy companies to default en masse this year, and the ratings agency also expects the defaults to spill over into non-energy names. Do you think that bonds, and I'm not talking about government bonds here, but riskier assets, do you think they can continue to rally if the Fed were to increase rates sometime this year?
Well, they can do whatever they want, but they are going to default. See, the thing that's triggering the default is not so much U.S. interest rates; it's the price of oil, obviously. Now that ties back to rates at some level, but the magic number there, or the critical number that Saudi Arabia had pegged at the start of all this, going back to the middle of 2014, was $60 a barrel. At lower than $60 a barrel, the frackers go out of business, whether they go out quickly or slowly or you know, one at a time. You know, that's a little bit of a function of how low it goes. And obviously, that they way overshot 60. They got down into the high 20s at the low, and now it's back up into the 40s. But the point being, the oil would have to get up to 70 or 80 to save the frackers, and I don't think anybody thinks it's going there. By the way, when you raise interest rates and you make the dollar stronger, that means a lower dollar price for oil, which hurts the frackers even more. So I think the frackers are in trouble. I think that wave of defaults is coming, whether the Fed raises rates or not. But if they raise rates and strengthen the dollar, look for a lower dollar price of oil, and it's more bad news for the frackers.
Big deal time here. The warmer climate cycle that shifted weather patterns around the world is making its long-awaited exit. El Nino generated the hottest global temperatures in more than 130 years. It also created economic damage by drying up rice crops across Southeast Asia, sugarcane in Thailand, and coffee in Indonesia. As El Nino says goodbye, its colder counterpart, La Nina, is expected to say hello. And scientists are warning that she can cause more hurricanes and greater havoc worldwide. So for more on that, we cross over to RT's Marina Portnoy in Miami, a city that knows a thing or two about hurricanes and such. Marina, this is being described as the Mother Nature's roller coaster ride from El Nino, which was sparked by warm sea surface temperatures across equatorial Pacific, to now scientists saying La Nina is the opposite phase. What does that mean for everyone that will have to go through that?
Well, Ed, the cooling of the ocean surface is an indication, according to reports, that La Nina is developing. Now, scientists say that her climate cycle can lead to more hurricanes in the Atlantic and colder weather along the Pacific Northwest, northern Great Plains, and parts of the Midwest. Colder than normal temperatures in places like Iowa could be damaging when you consider the state as a major source of corn and soybeans. Now, colder winters throughout Europe would create a higher fuel demand and maybe higher prices. According to scientists, La Nina could be significantly damaging for countries like Brazil because it's expected to create drier conditions and probably a drought. That would exacerbate the water crisis Sao Paulo is already battling, and the country, which is a global leader of soybean and orange production, could suffer immensely. Meanwhile, Indonesia and India could suffer heavy rain. Australia, scientists say, could suffer a disproportionate number of major flooding events from La Nina, which in turn could negatively affect the country's coal production. Now, all of this is interconnected because when the production of commodities are affected, costs for consumers can rise. According to scientists, the mayhem that may be unleashed by La Nina would be stronger and last longer than El Nino.
Interesting. You know, that's all bad news, but is La Nina good news for anyone or any industry?
Well, experts say La Nina would be great for natural gas producers. A cold winter would fuel a higher demand. This past winter was the warmest on record in the U.S. It collapsed natural gas prices to the lowest levels since 1999. So you could imagine how good a normal winter, let alone an even colder winter, would be for the gas industry.
You know, I'm not really excited about that particular thing that you're saying there.
But I'm in Miami.
Right, yes. Now, how long is La Nina supposed to last?
The million-dollar question. Well, typically, La Nina, her episodes reportedly last 9 to 12 months. Now, the U.S. Climate Prediction Center says there's a 75% chance she will hit by December, but some forecasters believe the climate cycle could come earlier, sometime between July and September. Prediction models, however, are better around June or July, so in the coming months, we may have a better timeline. But in the meantime, many countries around the world are probably preparing in some capacities. All eyes right now are what forecasters are predicting regarding La Nina, because these weather patterns, particularly if they affect countries throughout the world in various ways, they can have an effect on the cost of so many different things, and also just natural resources and the way people are living.
Very interesting. I hope that it's not as bad as you make it out to be in terms of the cold.
I hope not either.
But that's all for now, Marina. Thank you very much for that reporting. We also love hearing from everyone there. You know, tweet at us at EdwardNH, at Bianca Fascini, at Portnaya NYC, and at AshleyBanks_RT. And also at Amira David, who is not here today. But you can remember to see all the segments featured in today's show on YouTube at youtube.com/BoomBustRT. From all of us here at Boom Bust, thanks for watching, and we'll see you next time.